It's going to be a wild day today. Got the builders in the room through there and directly above me, knocking 7 bells out the house. So if you hear a lot of banging, that's what it is. But I still need to work and I still need to earn a living. And today that living's going to be made on the DAX.
Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I am the happy fella Scruff, and I'm happy because I got me coffee, and we all know Scruffy likes a coffee, and the house is starting to get put back together, so I'm really happy. But are the charts making me happy? Well, let's find out. Well, what we're looking at today, as I said, is the DAX, and I have already started the breakdowns for the guys. If we just look at the indices, that is there. Done the breakdown for them, so they know exactly what it is I'm looking at. It's not quite ready yet, and that's represented here. It's telling me that I'm going to be selling, which I will be, but there's no trade available yet, and wait. So let me just break this down a little bit for you. And then when it's time to go back to market, I'll switch the camera on and we'll get rocking and rolling because it might probably be in the next hour. So if we look out at the daily, you'll see I've got all my levels in play. This has tried to push up twice and failed and has now just breached a key level. Now this level is of importance because if we look to the left, we can see it's stalled here on numerous times before. And there's been no reprieve of this run, okay? Now, I'm not a lover of trying to predict the market, but what I do is follow common sense. And I know a sustained move can't last forever. And we're seeing the reds coming in. That tells us the sellers are coming back to the market. Take this to a 4-hour, and you can see that it's predominantly red. There's lots of reds, okay? So if that's pushing down and continue to push down, then we're in with a good shout. So we're going to be looking in this zone here. Take this to an hourly. There's the hourly. Now what we can see here is there's an overextended move here that did push this high. Now if I want to just check this, I can take an extension from there to the top of the move before it fell down and back again and across, and we can see it failed to get to the 127, right? If it failed that, that means it's coming back to range, and that's exactly what it's done. Okay, so what can that mean? Well, that means I can put in a retracement from there to there. Now this will give me good points of attraction. Okay, so if I just drop in a couple of lines. Now you don't have to do this. I put them in really just so that I can recognize them when I'm down on a small time frame, that these blue lines come from a major fib on an hourly. That's what I do it for. And what they give is good reference points. Now those reference points can be used in various ways. Use them as entries, exits, whatever. Now for me, if I know it's coming into it, I know there's a good opportunity it's going to bounce away, so maybe take some profit, that sort of thing. So that's what we can see here. So this is the fib that I'm working on, this drive. But this can also represent a good entry to get into the market. Now let me explain that. There's the drive, there's the base of it. Pull that back to the top. Well, what do we know? That marries up, so that is now showing me a good area. We have a barrier underneath it, which is this. So I'm going to drop an extra blue line there. Now that's give me some nice zones of attraction here, because this is what I'm going to use to get into the market. All right. Drop it down to 15-minute. And sure enough, there's the drop that I've just drawn in. We've now got these as good reference points. And we've got this solid line through the middle, which could probably act as a good zone of attraction or interest. And then we can use that to bounce, to carry on down on the move, because the general premise is down. So that's what I'm going to be doing. What I'll do, because there is a lot of noise in the house today, I'll be looking to enter in and around this area. I'll be doing it on a 5-minute chart. Now the 5-minute chart is entry only. It's all I'm using it for. And then I'm looking for it to come up, bounce either here, here, or here, to then move down. Okay. Now, yesterday, if you saw what we're doing, we pulled that out the market, which wasn't bad for a bank holiday. No tickets, and we've got nothing running. So you can see the continuation of the market. So when I come back, I'll come back at the end of the trade, and I'll have a chat with you about what I've done. But in the speedy bit, you'll kind of see the orders coming in, but you know they're going to be in and around here, and we're going to be short. And that's kind of what I've told the guys. And the beauty with that group, if you haven't seen it before, is I tell them well in advance before I press this button. I think that's fair. So let's do this, and I'll come back to you when it's time to go into market. Okay guys, I'm back. That's that trade stopped out. Did pretty much what I expected. Came up to the key levels. Respected the fibs that I put in, even though many people think fibs are a waste of time. I love fibs. Fibs show the way. These are hourly fibs, and it went to the pip to it. Pushed up to the pip, 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 back down, stalled, bang on it. Fibs are your best friend. Trust me, they work constantly. Why? Because they bring a calm, sensible set of levels to a random market. It's what they do. They show the ratios. Couple that with some strong levels, you're halfway there. You genuinely are. So this can easily push down, probably will. Am I worried? Not really. So that's the end. Nothing, no tickets. And there we go. It's not the biggest day in the world, but it's certainly not the worst day in the world. I do try to go between 200 and 300 quid a day. My kind of benchmark that I have in my mind is as long as I'm over 200 quid, I'm happy. But this late in the day, there's a news event in 35 minutes. I don't really want to be going any further into the market. And I don't fancy trading tonight because I'm knackered. So I'll just do it again tomorrow. But there we go. So that's 74. Well, best part of 180 quid there. 200, 206, 207 quid. I can live with that. That's not bad for a day's work, considering I'm now finished and it's 25 past 2. Do what I like now. And what I'm going to do is continue to sort of try and piece this house together. The builders they've taken part of the staircase out and made a complete arse of it. For fuck's sake. They're doing my boxing. When I said at the start of this, I might as well do it myself. I think I might. Hey, have a look at this.
You ding-dong!
Believe it or not, that's meant to be tidy work. I'll do it myself. I will. I'll just do it myself. Anyway, enough of my grumbles. What else can we do ourselves? Well, there was a good point raised in the Discord about watching signals and watching other traders and how their chart doesn't quite look the same as the person they're watching, and the price is different, so they can't really get in at the same time. What I'll say about signals is I can't stand signals, and I've got very little time for signal providers, and I'll tell you for why. It's fool's gold. Because of the feeds and the way you look, a broker, so you've got broker A and broker B. They might have different prices because their spreads are different, their cost of business is different. So you'll never be at the same price. But also inside the same broker, and we had this with the Discord group. Little salute to Hoagie there over in Australia, little Mark. His IG, for all, I use IG as well. That's my web trader platform. Our sort of charts are slightly different because of the time zone. So it depends on what exchange that they're pulling the feed off as well. So all I'll say is trust your own trade and trust your own screen. And the price on the side is actually quite irrelevant. It doesn't mean anything. What you're looking for is the motion of the market. So the key turning points. Those turning points give you the levels. The levels give you the zone. And then the price will bounce between the two. It doesn't matter what the bloody number is on the right-hand side. It really doesn't. You just need to watch the motion of the market and then capitalize on that motion. Hope that makes sense. Anyway, I suppose I better get some work done before Winky kills me. If you do want to help Winky and keep her out of my hair, do check out our little Forex mugs. You'll see a merch shelf under the description, or just pop over to the Scruffy Trader on Shopify, and she sells all sorts of Forex merch. So sponsored by Winky, free, because she'll not pay me note. She cost me a fortune, boys and girls. Unbelievable. But anyway, have yourself a good one. Trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.